All right. Welcome to another Chris Trade market recap and a look ahead. And if this is your first time to the channel, please leave a like. It really does help with this channel. But yeah, I have to actually apologize that I haven't been posted any videos for a month actually. And the reason for that is I actually got a little bit sick. And not only that, but I had PC problems and I had laptop problems. I ended up dropping my laptop, which is a big ouch. So that's still in for repairs. And then I actually ended up rebuilding my PC case and got a new case for it. It's pretty sick. It's pretty wild. I really like it. And yeah, just upgrading it itself. But I also had some difficulties with that. And because they supplied me the wrong case and that I ordered and so forth. So yeah, unfortunately, that's what I've been busy with for the past month and while there's been no videos. And on top of that, it just allowed me to kind of restructure and get more structure actually in terms of what I want to do with this channel. So as you can quickly see, I've got Sundays. I'm still going to be doing my markets look ahead. Tuesdays will be technical analysis. We'll be looking at candles, understanding patterns. And then I'll have fundamental analysis. This will be looking at macroeconomics, just understanding of how things flow in terms of why looking at oil is important, why looking at the 10-year yield is important. Understanding the Dixie, what's happening there. And then also portfolio management ideas. This is in terms of setting up, let's say, a 10, 70, 20 portfolio structure, the pros and cons of a 60, 40 portfolio structure, or even what is a dragon portfolio, things like that. And then Thursdays, I will be doing industry sectors videos, something very similar to what I've been doing now, which is the Megatrend series. The first one I did was on space, the industry. The next one that's coming out on Thursday will actually be on the robotics and automation sector and stocks that you should be looking at if you are looking to get into investing into that type of industry. Then, we'll be looking at cryptos as well. And then, I'll still be doing the scam or legit reviews. I'll still be keeping you guys up to date with the legal shenanigans by G999 and their bullshit. I've got this section I'm quite excited about, and that's doing interviews. So I'm in the process of lining up a couple of interviews and reaching out and trying to get some well-educated people onto the channel itself, just some movers and shakers and so forth. And, the whole plan is to always try and look and improve content for this particular channel. So that's what I'm looking to do. And I'm in the process now of just setting up the first interview, and that is with Real T. So I have reached out to the owner, and they have agreed with just trying to get our calendars in place and a time and date. So I'm very excited about this particular section, which is the interviews. And then Saturdays, and this is where one of the biggest changes comes in, because I was actually doing live charts on Saturdays, but I'm just not getting a constant bandwidth from my internet provider. I've actually got satellite. Well, I'm receiving my internet via satellite. I'm just not getting it quite smooth. And it's just pissing me off. So I'm scrapping that program for now until I can think of a better solution. But right now, I think this is a better solution in terms of doing live crypto analysis and Q&A. And that will be for like an hour, 2 hours, where you will actually interact with me. And it's purely on crypto. So if you want me to have a look at certain crypto projects and give my analysis right there, and then technical analysis, fundamentals, and any other Q&As in terms of, what do I see happening in the crypto markets for the week, things like that, and other projects that you think I should look at. So it really does add a nice dynamic now in terms of you guys actually interacting with me now. All right, guys, so that's just my little updates, but let's get into the markets. All right, so let's understand what we can expect in the market for this week, and also just going a little bit more into the future. Now, pretty much on the charts that I've got here, pretty much flat. S&P 500 is flat. NASDAQ 100 is flat. The Dow Jones is flat. The Russell is slightly under, but relatively flat. The VIX is actually flat. And you got crude oil, which is flat. Natural gas is flat. gold is under pressure. You got Brent crude, which is also just really flat. However, things are a little bit different in terms of the futures. And we just have a look at the futures now quickly. And you can see that the closing on Friday, S&P 500 was slightly up. NASDAQ 100 was slightly up. The Dow did really well and was slightly up. Even oil did extremely well in the futures, and it's sitting at 80 US dollars per barrel. So that's doing really, really well. Okay, so what is driving all of this? Where, what are the environmentals? I actually did a post, during my break here, and as you can see, people were screaming that, the economy is going to crash, economy is going to go down, got a rising wedge, it's going to collapse. All right, we're getting a massive market correction. All right. And I posted here that no doubt, this is in September the 21st, right? This is pretty much the time where I was sick and I was just having a lot of PC issues. So, and I wrote here, no doubt the markets need a healthy correction. In fact, they welcome it. But in this environment, I don't see it. The Fed will continue to prop up the market. Now, I actually want to dive quite heavy into this, but more from a history point of view. And if I just go back here, as you can see, it was just before this actual correction happened, but it was just a minor correction. This is not a crash at all. If anything, it's just picked up again, and this is going to go much higher. And I'm going to explain why. So from a history point of view, while I was taking my break, I was diving quite heavy into the Roman economy, and I was also diving quite heavy into the Chinese economy, the ancient Chinese economy. And what many people don't realize is that during the peak of the Roman Empire, there were actually two hegemons that were coexisting. Of course, one being the Roman Empire at its peak, but also the Han Dynasty, or the Han Dynasty of ancient China. Now, they knew about each other, but there is no evidence to suggest that they actually had direct communications with each other. Any type of trading or anything like that would have happened indirectly through the ancient Silk roads, right? Now, we can propose that they obviously must have known about each other because Roman coinage was found in Japan. 4th century Roman coinage actually was unearthed in Japan. So if Japan knew about the Romans, well, of course, the Chinese would have known about the Romans, well, particularly the Han Dynasty would have known about them. And this particular time frame is really extraordinary because it is mirroring exactly what we're seeing now in our modern times between the current Roman Empire, which is the US, and also the current Han Dynasty, which is China right now. And the reason why I'm referring to them like this is because, well, we know our society, our philosophies, our way of thinking all stems from the Greek and the Roman empires. In fact, we are very much still Romanized. If you have a look at America, they've got the Senate and their governments. If you have a look at their government buildings, it's very much Roman. So we still have a very much Romanized way of thinking. Whereas with China, the way they're setting up their economy is mirroring exactly of the Han Dynasty. And it's just their way of thinking. Now, I would guarantee if the Romans and the Chinese actually met, they wouldn't have liked each other. And you can kind of see that being played out now between the US and China, simply because you've got these two hegemons competing for the same market. Okay, so it's competition. Right, so why am I telling you all of this? Why am I looking at, the history of the Roman Empire and obviously China? Well, at the apex of the Roman Empire, the Romans actually contracted a plague, which is called the Antonine Plague. And they got this from the East, right? There's a lot of similarities with the Antonine Plague than with what we actually had with COVID-19. The symptoms are actually fairly similar, but a lot of people believe that it was actually smallpox. Not only that, but the virus period when contracting was also 2 weeks, very similar to COVID-19. And what's quite interesting with all of this is, right, the Romans came back with this plague, right? It completely ravaged the Roman Empire. A lot of people died from it. It had a fairly high mortality rate to it because it was the first time they were ever exposed to this type of virus. Pretty much it shut down their economy. And exactly what we're seeing now. We had to shut down our economy. But what's quite interesting is in order to resuscitate the economy, the Roman senators decided to come up with a thing called, you guessed it, the infrastructure bill. Now, this is remarkably similar to what is actually happening in the US. As you can see, in order to try and resuscitate the Western world, our current Western world, we've got the thing called the infrastructure bill, or what is known as Build Back Better. The G7 is carrying on with that mantra. They're also looking at infrastructure bill aimed towards Africa and some of the developing nations, but also Build Back Better. And it's fairly the same Roman mentality. And this really didn't help in terms of their inflation crisis, because the inflation crisis came about because of this plague. The plague was really the start, was the pin that popped the bubble, so to speak, in terms of the Roman economy. And in order to try and sustain inflation, they had to find out ways to rebuild their economy, and the best way they could do that was build infrastructures. And it's the same exact bloody way as what the US is doing now. However, in order to fund this, they've got to mint. And it's the same problem that the Romans had. In order to fund these type of infrastructure bills, they had to print and produce more coinage. In other words, in order to do that, they had to degrade the value of their actual coins because it was made out of silver. The base metal, they had to put other contaminated metals in there, and that devalued their coin, but it allowed them to mint even more. So now you had a surplus of these coins floating into the system. And it's exactly what is happening in the Western world, actually worldwide. It's not just the US, but the US has just been doing it at quite an unprecedented rate. And what has happened is now, in order to fund this infrastructure bill, well, the Fed has to print more money. And again, as you can start to see, it didn't help the Romans in terms of curbing their inflation. So this is not going to help the US economy in terms of curbing their inflation. If anything, it's just going to help spurn inflation even more. And what we're witnessing, really, actual beginning stages, the actual decline of our Western society. This is where we're at as an environment. It's the exact same environment where the Romans were, is literally they reached the apex, and from there it never recovered as an empire. It just spiraled and spiraled and spiraled and spiraled into decay. And the same is happening on the Eastern Front, which is China. Now, as explained, you had the Han Dynasty. What is quite interesting from the Chinese perspective under the Han rule, because you had your industrialists to wholesalers and merchants, from shopkeepers to wealthy businessmen, could pretty much engage in a wide range of enterprises and trade in their domestic and public and even the military sphere. Now, what is quite interesting is that the Han government tried to limit the powers of these wealthy groups through heavy taxation and other bureaucratic regulations. And it's kind of what we've been seeing now happening in China. They put in more bureaucratic BS in terms of their tech giants that they've got. They really have been decimating them because they are trying to curb, the wealthy technocrats and elites in China, and trying to uplift the poor people. And it's the exact same process what the Han Dynasty did. The problem is, the more the government tried to get involved in these type of programs over that period of time, they ended up taking over, and their economy just ended up being completely decimated at that point. So really, from the Han Dynasty, China ended up going through cycles of decline in their own economy, and eventually decimated it because they ended up having rampant inflation, confiscated gold and so forth in order to try and curb their inflation, but it never happened. So what I'm telling you is, this is the environment that we're in. We are mirroring exactly what is happening with ancient bureaucratic China, with modern bureaucratic China. with ancient monetary and fiscal Rome with modern monetary and fiscal Roman US. So this is the environment that we're in. And both the West and the East are pretty much going to be going into decline. And this is the backdrop with the environment of how we're playing things out and what is actually happening. All right. Another aspect that's kind of missing from this is we need to actually look at oil and understand what is going on with oil. Now, I found an interesting news article here. This is by Al Jazeera. Now, I'm not picking on Al Jazeera, but it's just the media narrative, really, that the big driver in terms of inflation, wholesale inflation last month was energy prices, which are currently on an upward tear, thanks to global shortages of oil, natural gas, and coal. This is the narrative that's being played out, and it's bullshit, okay? And the reason why I say this is utter bullshit is it's the inflation that we're experiencing worldwide is not because of energy prices. It's not because energy prices is just a symptom of the inflation that we're having now. If we go to Yahoo Finance, you'll see oil prices appear to have found much needed support and holding above the psychological important level of $80 per barrel. And just days after a surprise crude build threatened to derail the bull camp. So on Tuesday, the American Petroleum Institute reported another week of large crude oil inventory build at 5.2 million US dollars. All right, we don't have oil shortages. If we go and have a look at the OPEC, and they're saying the same thing. OPEC credits its oversight with preventing oil price chaos. In other words, what OPEC has been doing is they've been controlling the actual supply itself. Now, the rationale with them goes like this, that if they oversupply the market right now, they're going to be stuck with surplus supply for 2022, and that's going to end up driving the oil prices completely down. All right. So they've been managing the actual supply in terms of the market right now. We don't have a energy or an oil supply issue. So that article, like I said, that's the narrative, is to try and push that narrative that the reason why you're seeing inflation is because there's a shock in the system in terms of oil supply. It's because of energies, it's going up. The price of oil is just going up and up and up. They're trying to blame that. These are symptoms, okay? In fact, oil is a fantastic hedge against inflation because oil prices skyrocketing is a symptom of inflation. Now, what is driving inflation? Well, it's the old story of overprinting. It's the oversupply of money into the system that is causing the prices of oil to skyrocket, the prices of food to skyrocket, simply because we are not producing the exact same amount of the surplus money that's been printed into the system. And this is what is causing inflation. Hence why I can confidently say that this is going up. This will keep going up. You got the infrastructure bill coming into place. That's more printing that's gotta happen. This will keep going up. In fact, you will see more record highs in terms of the market. Right. So what does this actually all mean for the cryptos side of things? Because as you can see, Bitcoin has gone on a fantastic rally, sitting at 62. It's obviously dropped down slightly itself, but Bitcoin's going to keep going up. It will keep going up. And I actually want to point something out here. So I'm not picking on this guy, but this is Mr. Whale, Crypto Whale. And in September the 28th, he pretty much outright stated that we are pretty much in a bull trap. And, the euphoria is that we're back to normal and we're in a bull trap and it's going to go crashing down. And of course, he tried to base this model really on Apple. Okay, so we've got Bitcoin, Apple over there. All right. So, and he predicted this going down. He was also calling that the stock to flow model was bullshit and it's wrong and this and that. Well, again, I'm not picking on Crypto Whale, but he did not understand the environment that we are in. You cannot base a model of 1999 to 2000 to our current model right now, the world did not experience a complete lockdown. Okay, the world did not experience the printing, the scale of the printing that is happening now in 1999 and 2000. We are in a completely different environment compared to this particular environment of 1999. So this is why he's gotten this horribly wrong, and why Bitcoin, based on the environment that we're in, is why Bitcoin is shooting up. And my prediction for Bitcoin is it's going to break its all-time high. It is literally what, 2,000? I must just have a look at the price now, but it's what, 2,000 shy, 4,000 shy of its all-time high. It's going to break it. It's going to keep going up higher and higher, and there's other fundamentals driving this. All right, we got Bitcoin education for Indonesia. So Indonesia Bitcoin Conference is a chance to educate Indonesians about a better savings technology. Okay, there's a lot of education that's happening in these emerging markets. Of course, they're going to be very interested in this. These are all bullish driving factors. If we have a look at Strike, launches new feature to allow users to convert salaries to Bitcoin. All right, these are all Bitcoin enablers. This is all bullish enablers. I mean, given the chance, of course, I'm going to transfer my salary into Bitcoin. You know, why not? Who wouldn't do that? We've seen this with sports stars itself. So this is a very bullish indicator. If we go to Jack Dorsey, Square plans to build an open source Bitcoin mining system. Bitcoin is in a very good space. The environment that Bitcoin is operating in is making it into a very good space. And that's not going to change anytime soon. The market is going to keep going up. Bitcoin will keep going up. Cryptos will keep going up. That's the environment that we're in. All right, guys. So that's my market update. As mentioned, Tuesday, I will be releasing a video on some technical analysis, and then Thursday I'll be releasing another series 2, part 2 of the Megatrend series, and that's looking at robotics and automation. It's actually quite an exciting space to play in. All right, guys. So yeah, this is Chris Trade. Have a great weekend. Peace.